Today is the 24th of October 2022. My name is David Hickson, and in today's market update we're going to be taking a look at the US dollar. I'm also going to be breaking some of Hurst's rules, so if you're a Hurst purist, stand by for some challenging ideas. Let's take a look at the dollar, and this is an analysis going all the way back to the early 1990s. And we have a monthly chart here. You will notice, let me display the semicircles so that you can see the visual idea of where these cycles are lining up. The 18-year cycle, which on this particular chart has been found to have an average length of only 12.9 years. So I'm actually not going to call it an 18-year cycle. I'm in fact going to call it a 13-year cycle. I hope that doesn't confuse you, but we experienced a 13-year cycle trough. As you can see, according to this analysis, at the beginning of 1995. We experienced the next one over here right at the beginning of 2007. And the most recent 13-year cycle trough formed over here at the end of 2018. Now, you will notice that the next shorter cycle, which would normally be our 9-year cycle, I'm going to call it a 7-year cycle because it averages at about 7 years in length, and that formed a trough over here in 2001. That was a straddled trough. I've mentioned straddled troughs before. It's a trough of a big cycle which is not very apparent, not very visually apparent in the price movement. So there was a straddled trough for the 7-year cycle over there. The next 7-year cycle, apart from, of course, the cycles that, the cycle troughs that are synchronous with the 13-year cycles that I've already pointed out, the next 7-year magnitude cycle trough formed over here at the end of 2012. Then we have the next shorter cycle. Usually that would be our 54-month cycle. In this case, it is only about a 40-month cycle, and you can see the positions of those cycle troughs. So far, so good. This looks like a fairly usual Hurst cycles analysis. So what did I mean by breaking the rules? Well, let's zoom in a little and take a look at the next shorter cycle. First of all, I'd like to point out the very even semicircles that we are seeing at the foot of the chart. Usually, because of the principle of variation and the constantly varying cycle wavelengths that we find in the markets, the semicircles tend to look a little lopsided. You can see this orange cycle is a little bigger than this orange cycle. That's what I mean by it being a lopsided semicircle. But if we take a look at the next shorter cycle, which would normally be our 18-month cycle, you will notice an interesting thing. The harmonic ratio in Hurst's nominal model between the 18-month cycle and the 54-month cycle is a ratio of 3:1. In other words, there are 3 18-month cycles for every 54-month cycle. However, as you will see on this chart, I have only 1 and then 2 18-month cycles for every one of the longer cycles. I've already mentioned that I call these longer cycles, the orange-colored cycles, 40-month cycles, because they do average about 40 months in length. And so I have a harmonic ratio between the 18-month cycle. Let's continue to call it an 18-month cycle because it is roughly 18 months in length, ever so slightly longer. But the harmonic ratio with the next longer cycle is 2:1 as opposed to the usual 3:1. That is what I mean by breaking Hurst's rules. In fact, I'm not really breaking Hurst's rules. I was just being dramatic about that because the rules still apply in terms of the principle of synchronicity and the principle of harmonicity. There is still a simple harmonic ratio between these two cycles, and Hurst never specified that there couldn't be a 2:1 harmonic ratio between the 18-month cycle and the next longer cycle. He simply discovered that there was a 3:1 harmonic ratio between the 18-month cycle and the 54-month cycle in his work on US stocks. Now, there is no rule anywhere that says that the US dollar must be affected by exactly the same cycles that are influencing the US stock market. Of course, you would expect there to be many similarities because of the fact that it is, of course, the US dollar. But it is possible that there are slightly different cycles that are influencing the dollar. And I think that you can see from these very regular semicircles that this particular nominal model works very well for the dollar. If we zoom out, I think you will agree that these semicircles are very regular. That doesn't mean that it is definitely a perfect analysis, but it certainly increases the chances that this is a good analysis that we are looking at. The interesting thing is that if we zoom in on the recent time period, and let's change this to a daily chart so that we can start focusing on what is happening right now, and let's turn off those semicircles because they can get a little messy at this kind of zoom scale. The interesting thing is that whether you are using Hurst's default nominal model or this slightly different nominal model, we are facing pretty much the same thing, which is a very big magnitude cycle trough that formed over here in December of 2020, a 40-week cycle trough that formed over here in November of last year, and we are expecting an 18-month cycle trough to form soon. However, an interesting thing has been happening, as I'm sure you can see from this chart, and that is that we have a bull type movement. In other words, the market has been accelerating upwards. Performing an analysis on the basis of synchronized troughs when you have that kind of price movement becomes fairly challenging because often the troughs are difficult to identify. As it happens, this is a fairly good trough analysis, as I will show you in a moment when we zoom in, but it does raise the question of whether the dollar is in fact influenced by cycles that are synchronized at their peaks. And so let me zoom out again and show you a peak analysis on this particular instrument. And here you can see the very long cycle peaks that have been found in the analysis. Here is a 7-year cycle peak. As a matter of interest, I'm applying the same slightly different nominal model to this analysis. If I display the semicircles here, you will notice that the semicircles in the peaks are just as regular as they are in the troughs. It's very unusual in my experience that we find an instrument that shows a very good trough analysis and also a very good peak analysis. So let's zoom in again and consider what is happening at the moment. Why have we had this tremendously accelerating upwards move? The answer is, of course, that this very long cycle peak is pulling the markets upwards. Now, if you are using a different nominal model on this analysis, then you might be looking at the fact that that very long cycle peak, in this case a 13-year cycle peak, in other nominal models it might even be an 18-year cycle peak. It is just possible that that peak might have formed recently. However, it is really much too soon to say that that peak has formed. And I would like to point out this whisker, this line over here, which indicates that the range of time within which that 18-year or 13-year cycle peak is to be expected does cover a range of time all the way back to about the middle of last year. And so it is not impossible that that peak should be expected to form fairly soon. However, if we take a look at the breakdown of the shorter cycles in this particular analysis, I think you will agree that the analysis shows a fairly good phasing. We have a 54-month, or in this case 40-month cycle peak over here in early 2020. Then we have a 40-week cycle peak at this peak here. We have an 18-month cycle peak over here. And as we go to the shorter and shorter cycles, you can see that the identification of the peaks is actually reflected fairly well in price movement. So I'm feeling fairly confident in this particular analysis, both in terms of the troughs and the peaks. What does the peak analysis tell us to expect? I've stayed out at this zoom scale so that I can show you this very clearly. This shows us that the peak that formed recently was in fact a 40-week cycle peak, and that we have another 40 weeks to go until the very big cycle peak is expected to form, which should be sometime next year. So let's zoom in again and consider what we are expecting to happen right now. Let's hide the peak analysis because I think it is useful to consider the analyses separately. We know that the peak analysis probably has another 40 weeks to go until a very big cycle peak, indicating that the underlying trend in terms of the peak analysis is probably still fairly bullish. What about the fact that we're expecting this 18-month cycle trough to form over here? This is, of course, based on the recent wavelength of the 18-month cycle, and it has been expecting an 18-month cycle trough to form. The nest of lows that 18-month cycle trough is a part of is centered around pretty much this week, and so we're expecting that cycle trough to form here. I often speak about my level of confidence in an analysis, and I must say that I'm not very confident about this 18-month cycle trough, particularly given the persistent upwards movement of the dollar. And so, as I've done in recent market update videos, I choose to actually hide those cycle troughs and focus on the cycles that I am actually confident in. The 40-week cycle I am fairly confident about, but actually my level of confidence in this particular analysis is down at the 80-day level. If we take a look at these 80-day cycle troughs, you can see that each one of them that has been found and phased in the analysis is a good, clean position for an 80-day cycle trough. And so I prefer to focus on the cycles that have formed at this particular level. You can see good, clean cycle shapes that have formed for each one of these 80-day cycles. And in fact, we can add a little bit of detail and make those good M shapes showing bullish cycles. Of course, the bullishness is caused by the very strong underlying trend. And you can see that that is why hiding the 18-month cycle trough, in my opinion, is a fairly good idea, because you can be very distracted by the idea that the 18-month cycle should be pushing price down. But when it isn't pushing price down, as is the case here, then it is better to simply ignore that cycle for the moment and focus on a cycle level that we are more confident in. And so here is the M shape for this 80-day cycle trough. You can see that I have rather ignored this price movement over here. So let's zoom in and consider what has been happening in the current 80-day cycle. Here is our most recent 80-day cycle trough in early August, and here is the 40-day cycle trough, according to this analysis, in about the middle of September. Is it possible that this trough that formed over here, and I think that somebody posted a comment to a YouTube video, might have been last week even, asking whether the 80-day cycle trough had formed in the dollar. Is it possible that that is the 80-day cycle trough? It is just possible. Here is the first bit of the whisker for the 80-day cycle, but I prefer to think that the 80-day cycle is busy forming around about now. Price might come down even further into this 80-day cycle trough. There is the circle for the 80-day cycle, indicating that the recent wavelength of that 80-day cycle would lead us to expect the 80-day cycle trough itself to form on about the 31st of October, so in other words, next week. In which case, this trough that formed over here was a 20-day cycle trough. So what are we expecting? According to this analysis, we are expecting price to come down into an 80-day cycle trough. We need to be standing by for the formation of that cycle trough, and then price is going to bounce out of the 80-day cycle trough and continue its movement upwards. At that point, we are going to revisit the concept of the magnitude of this peak that formed towards the end of September. Potentially, as I've mentioned, a 40-week cycle peak, but bearing in mind that we have a much bigger peak looming ahead in the US dollar. How are we going to be able to confirm that the 80-day cycle trough has formed? A very useful cycle tool for doing that is the valid trend line. And here is the valid trend line for the 20-day cycle. When price crosses above the downward pointing valid trend line, it confirms that a trough of at least 40-day magnitude, one cycle greater in terms of magnitude than the cycle upon which the VTL is based, has formed in the market. So what happened effectively on Friday and over the weekend is that price crossed down below the upward moving 20-day VTL. therefore confirming that that is the 40-day cycle peak. That's not really a very big surprise. It doesn't provide us with any particularly useful information because we were pretty sure that was the 40-day cycle peak already. So we can hide that VTL and not pay any attention to it. The downward moving VTL, however, is very interesting. When price crosses up above this VTL, it would confirm that a trough of at least 40-day magnitude has formed in the market. Here is the circle and whiskers on each side of it for the 40-day cycle, and so certainly if price moves straight up from today, then that would confirm that the low point of today was the 40-day cycle trough. I'm not saying that that is the trough. We could expect some further downward movement, and then when price comes up and crosses above the 20-day VTL, that would confirm both a 40-day cycle trough and, by the principle of synchronicity, also an 80-day cycle trough. Of course, we have hidden the longer cycles, and so by implication, we would also assume that that is the 18-month cycle trough. But to be able to confirm that, we would need price to cross some longer VTLs and FLDs and provide more evidence of the magnitude of that trough. For now, I prefer to focus on the 80-day cycle level, and that is the trough that we are looking at forming soon in the US dollar. I do hope you found this market update useful and interesting. If you have any questions, please join us on our Discord server. We have a Hurst Cycles Discord server where there are many people who would be very happy to get into a discussion about what is happening in the markets in terms of the cycle analysis. And of course, you are very welcome to ask your questions in the comments below this video.